Hello everyone, Dan Main here with the Synergy Alliance team powered by Gershman Mortgage. And Gershman Mortgage is actually St. Louis's oldest independent mortgage company, and home loans are all that we do. Looks like I was getting a text right there. Give everybody a second to kind of join and welcome you to the Facebook Live. And for newer folks visiting, thank you for stopping by and checking us out. And for repeat folks, we appreciate you as well. And wanted to share a fun fact with you. Did you know how Missouri actually got its name? Interesting story that it was actually named after a Sioux tribe of Indians called the Missouris. And the word Missouri actually means people of the wooden canoe. So a little fun fact for you about the state of Missouri while we wait for folks to come on live with us. And so just keep going with this. Last week at the end of June we had the Main report, which is always the last Tuesday of the month, and it gives you some market updates on what's trending in the market. And we talked about how new construction business is on the rise, where existing home sales has a significant shortage of inventory, that many would-be home buyers are actually shopping for new construction loans. So that prompted a few questions that come up, and I thought we'd address that to educate a little bit. What is the difference between a new construction loan and a regular home loan? And it's a great question because there's really two types of new construction loans you could do. One new construction loan would be more of the traditional type of mortgage. It's just a longer sales time, right? The builder has to develop the land, dig the hole, put in utilities. It could take anywhere from 60 days all the way to 180 days to close on a new construction loan, sometimes longer. That's for like a builder that's building in a community. That particular builder may choose to use their own money to build the home. Specifically, you put down a deposit, have evidence of your loan being approved, which would be a loan commitment letter from me, and the builder would begin to build the home. At the end of the build, when the project is complete and the home is ready to go, we order the appraisal and maybe a final inspection from the appraiser to make sure the seed and the sod is all down and the home is ready to go, and then we close, and then it's really one-time financing. The builder's paid off, the loan is now in your name, you closed, you're the homeowner, and you begin making payments over the term of that loan. The other type of loan is a new construction loan, more for like a custom home build. And that might be a little bit larger of a home. That particular builder may want to use your money to build the home. And in that case, it really is more of a two-step process. You'll use a shorter term financing, usually an ARM, adjustable rate mortgage. It's usually an interest-only type scenario, but it is a much different type of financing in the fact that you're actually taking out a construction loan and you're giving disbursements to the builder as you go. So one disbursement might be when they put in the foundation. Next disbursement could be the subfloor. Next disbursement could be the roofing, and so on and so forth, the plumbing, the electrical, and you might have 8 or 10 disbursements as you go through the process on that construction loan. Now at the end of that journey, that construction loan needs to be paid off, and that's when you obtain the permanent financing. So it's really a two-step process. The construction loan that is for the custom home is a little bit more involved, can be a little bit more stressful, but that's why we're here to help alleviate that stress, be with you every step of the way. So hopefully that helps answer those questions, and a couple other questions that came in with it too. Do we need title insurance on a new construction loan? Of course, you definitely would want to have title insurance, and it's one of those things any insurance agent can tell you, you really don't need insurance until you need insurance. What is title insurance? Title insurance actually ensures the property is free and clear of any judgments, liens, or encumbrances against that property. And if you consider the history of computers in the workplace, 20, 25 years ago, it was just hand ledgers at the courthouse. So there's lots of crazy things that can pop up on title. So title insurance ensures you, the homeowner, and your lender that the property is free and clear of any judgments. And if anything should come up, you have an insurance policy that'll take care of that debt or whatever that obligation was that was unsatisfied. So it may sound like a silly thing to need, but absolutely covers you as the buyer. And a couple other questions with that. How do they work? How do construction? I think we answered them all through that. I kind of covered all the rest of the questions that came through on that. And so if you think of any questions, we're here to help. Happy to help, and we love treating people like people and helping people achieve and maintain the American dream of home ownership. And if you have a question, please send me a private message. You can text me, call me, email me. My phone number is area code 636-284-4144. 284-4144. And we love helping people. I'll be with you every step of the way from application day through closing day. I'm licensed in CO and MO. That's Colorado and Missouri. Please call Dan for your home finance plan. Have a great day. Bye-bye.